This morning, we had some major news headlines, both from Donald Trump and his gripe with Colombia and the tariffs that were imposed there, as well as arguably the more kind of market-moving news this morning, which is Deepseek out of China posing a threat to the AI trade and the race of AI, if you will, between East and West. In today's video, we'll be taking a look at the market's reaction to this and what it could mean for tech stocks, but specifically for markets in general. What does this tell you about uncertainty across the world? What does it mean for gold? What does it mean for the dollar? All of this and more in today's video. Let's jump in. Welcome back to the channel, guys. Just wanted to say as we get started, if you enjoy my commentary on the markets, there's a lot of research and work that goes into these videos. If you could help me out just by hitting the thumbs up button on this video, I would greatly appreciate it. I also wanted to let everybody know who is a regular viewer of my channel that we just kicked off a massive discount on the Edge Finder. Last week, we had a lot of people try out the tool and check it out for themselves. We did some tutorials and videos and all sorts of stuff for people who wanted to learn more about the tool. And this week, we are offering it at a major discount. You can save several hundreds of dollars with the current discount that is available. All the information can be found down below in the description of this video. And if you chat with us on our website, we'll give you extra discounts, more information. All you got to do to find out more about that is, like I said, chat with a support member of our team using the first link in the description. So when you click the link to chat with us, you'll be directed to this page right here. Click chat now, click Edge Finder 35% off. It'll be an extra discount for people who are supporters of my YouTube channel. Click that link. You can get 35% off by chatting directly with our support team who can answer questions and make sure it's the right tool for you and your trading. So don't miss your chance to get a huge savings off the Edge Finder and start trading with macroeconomic data, sentiment analysis tools, and much more, all in one single browser-based tool for a one-time payment to get access. Take a look at the S&P 500, down 1.76%. The NASDAQ, which is down just shy of 3%, but at one point was down 5% on the day. The Dow Jones slightly flat today, which should tell you something about relative performance here. And then the Russell down 0.7%. Asian stocks also got hit hard, specifically the Japanese stock market down 3.5% as the Bank of Japan rate hiked, and you have Chinese stocks actually up on the day. So some divergence across the board here. And then you have the VIX, which spiked at one point here on the day, up 50%, has given back a lot of that so far, up about 26-25% on the day so far at the time of recording this. I just want to warn also that volatility is very high right now. So by the time you get this video, the market may look a little bit different, but many of the commentary points that I'm going to make in today's video should still remain the same. Gold is down about 1.1%. Silver is down 1%, copper down 1.3%, natural gas down a little bit, and oil, which I took a long position perhaps a little too early, is also down about 1.9% today. Bitcoin giving back some gains, but bouncing off of the lows pretty well. I'm still in this trade, up from when I initially bought it back over here, the 13th of January. I've got my stop loss below today's lows in case we continue to move south. The dollar index also is failing to hold support here, which is a key thing I want to point out. Dollar index looks short-term, in my opinion, a little bit weak on the technical front, but our US economic heat map would still suggest, at least in my view, that a lot of factors are still pointing towards dollar strength. Even if in the short run we get some bearishness, I'm looking to potentially buy that dip and build a bigger long position on some US dollar crosses that I'm watching. GDP growth, manufacturing PMIs, services PMIs, these are also showing some very strong growth out of the United States compared to forecasted values. So that's going to keep me more on the bullish side of the dollar. When we look and filter for major currency pairs, you can see a lot of that same economic data that we just looked at on the heat map is contributing to some bullish US dollar cross bias. Bullish on things like USD CAD, bearish on things like the Australian dollar, the pound dollar, and the Kiwi dollar, which would suggest, again, bearish counter currencies, bullish the US dollar. So I'll be looking for plays across some of these currency pairs going into the rest of this week. When we look at the commitment of traders data, we also see the US dollar still getting some very strong institutional demand on a proportional basis, sitting at 67% of futures contracts held by the non-commercial positioning on the long side. That's a very bullish overall weighting. Same thing for oil, which is something I also took a long position in, and the NASDAQ, which looks pretty interesting today with the long wick off the bottom. We'll see if that wick can hold. Taking a look at the institutional money flows for this week, we can see the US dollar saw a big demand, the Japanese yen, the Australian dollar, the NASDAQ, and the Dow. And again, this report can be accessed with the Edge Finder if you have access to it. It is a browser-based software, and the full access can be purchased for a huge discount right now. I know I just mentioned that earlier, but I just want to make sure that if you like the tools being used in our videos, you know where to find them. So I actually picked up a long position on the S&P 500, and I did actually trade it last week. I went long around this area, rode it up to this area, and actually stopped out here this morning on the sell-off, and then now actually decided to re-enter this trade as I still really like the story for US stocks. Despite this hiccup this morning, I'm going to give you my reaction to that. I actually think that the Chinese AI stuff is probably a little bit of an overreaction. Now, that doesn't mean that the market can't proceed lower in the short run, but risk to reward wise, I like this dip here on the S&P 500 and still think that we have a good shot of holding the 6,000 area and continuing higher. If we don't, like I said, I'll stop out and take a loss on this position if I need to. I'm also long TLT, and this trade has been working against me. I've talked about it many times on my channel. I'm in the red on this trade, but it has come back a good bit today off of maybe just a little bit of fear around what's going on in the world, maybe people wanting to rush to bonds for safety. TLT is, of course, a treasury bond ETF. And I think the market still has plenty of worries surrounding inflation. And over the weekend, we saw something interesting out of Colombia. So over the weekend, there were some people who were getting deported out of the US on military planes. And there was a very drama-filled kind of 24 hours there where basically they denied allowing those people back into Colombia. And then there was these big threats from Trump on tariffs, and it kind of showed the market a little bit of what how Trump seems to be wanting to deal with this stuff. Is basically, if you don't comply, tariffs are coming and we're going to make an example out of you. And I think the market kind of was reactive to that, right? There was a lot of fear around that. And I think it's part of the reason that the market may be selling off a little bit today is the concern, well, hey, if Trump's going to be trigger happy with the tariff stuff, that leaves us in a state of not knowing what's going to happen next with tariffs, which the market always just dislikes that uncertainty. And of course, with bonds moving up, we've got the 10-year and 2-year yield dropping a little bit here, perhaps just in reaction to everything that we've just discussed here today so far. So yields slightly lower, bonds, of course, going to rip higher on that. And for me personally, this is a position that's a bit of a hedge in my portfolio. It's a boring position that I've got just kind of holding. And if we do get a big pop to the upside for TLT, what I'll look to do personally, for those who are familiar with options, is I'll look to sell a covered call, perhaps up in the 94 to 93 range. See if I can get some good premium, but would only be interested in doing that if you get a good pop to the upside there for TLT. And despite all the recent sell-off in markets, I also wanted to just show you this new tool that we've been working on the stock box, which is our new stock market specific data tool. If you don't have the stock box, there should be a link in the description down below, or you can chat with us on our website and get access. We'll also offer that 35% off discount for those interested in this. But check this out. Market breadth is a very important indicator. It shows how many stocks are actually participating in recent rallies or sell-offs. And what we see here is there's actually been some really good broad participation across the stocks that we track with the stock box. So I just wanted to show you that a lot of stocks trading above their 20-day moving average, mix between the 50-day moving average, and a lot of stocks trading above their 200 and 100-day moving averages, showing a little bit more broad participation than perhaps we have had in recent years. With this new tool, you can also select for specific industries. If you're a stock person, you might choose to look at tech stocks or real estate, industrials, healthcare, all sorts of different things within this tool. If you have the stock box already, it should just be under your tab here. This is a free update that you got already, the market breadth category. Today's video is also sponsored by DNA Funded. If you haven't checked them out already, there will be information in the description down below. They offer payouts in as low as 7 days, profit sharing up to 90%, unlimited trading days on 1 and 2 phase challenges, and you can trade over 800 assets in one prop firm. Use our code down below in the description to get a nice discount off of your challenge. Thank you for watching and have a great rest of your day. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.